The Fed holding its final policy meeting of the year this week. Economists widely expecting another 25 basis point rate cut. Our next guest would question that move. And joining us right now is Roger Ferguson. He's former Fed vice chairman and a CNBC contributor. Explain, that's a pretty intriguing opening, Roger. Why would you question that?
Look, I think it's likely that they will move the 25 basis points. I think the issue is that the incoming data has shown, and everyone has observed it, that the move towards the 2% inflation target seems to have been stalled. When one looks at some of the GDP now numbers, the most recent forecasts of GDP, it appears to be the economy growing above trend. And we see loosening financial conditions. So while I think they've signaled a 25 basis point move and are therefore likely to go through with it, there are going to be strong arguments on the other side, and it'll be interesting to hear what Jay Powell has to say about those counter-arguments when he gets to the press conference.
Yeah, Roger, we had Robert Kaplan, the former Dallas Fed president, on air with us on Friday, and he said if he were still in the seat as the Dallas Fed chairman, he would very likely say the same thing you were saying, is that he wouldn't cut at this point. He would be very open to the argument and debate, but he thinks it's going to be a much more lively debate than maybe the market does at this point.
No, I think it's going to be a lively debate. I think they have signaled clearly what they want to do. Now, the argument that those who want to cut are going to make is, well, a couple of things. The most recent data showed some improvement in one of the areas that had been pretty sticky around inflation, which was rent. And they're also going to say that they still think that we are in restrictive territory. So I think Bob Kaplan's right. There will be strong arguments on both sides. At the end of the day, I think the market signal and the market expectation will weigh heavily on the decision making.
Why do they do that? I mean, if they've already, Chairman Powell himself has very clearly made the point that, look, we don't think we're going to be cutting for a lot longer. We want to be able to sit and take a look around and really see what's there. What's the argument for cutting now versus waiting till January? Give yourself a little more time to sit and think around. Why do we have to do this in such quick increments? Why do we have to spoon feed the market what we're doing in advance and then stick to that plan, whether we really think it's a good idea or not?
Well, first, I think many of them do think it's a good idea. We should be quite clear. The reason it's going to be an interesting conversation is many people on the committee will think it's a good idea. Secondly, I think they want to position themselves well to move either way if need be. There's been some sense that inflation is sticky, but as I said, there's some early signs that maybe inflation is continuing to move down. And so I think it's important for them to exit the year positioned in a sort of a nimble fashion. And 25 basis points at this stage, I think, it will have some strong arguments in favor of it. So I think that's why they're going to do it, and it's perfectly reasonable. At some point, you always have the last move, right? And then you wait and see. So this might be the last move, and then they'll wait and see, and then decide once the incoming data give them a sense of where to go in 2025.
Robert Kaplan said that the best argument for not doing it at this point is if there really are some significant changes, if inflation is quite a bit stickier than we think, if new policies that are put in place by this new administration turn out to be a little more inflationary, it's going to be a little embarrassing to have to reverse course. And it's the credibility issue of the Fed.
I don't buy that argument. I think the Fed will be very credible. Their argument for why they moved was they were seeing labor markets loosening more than they thought was necessary. They had a high degree of confidence that inflation was coming down.
I'm sorry, Roger, I should be clear. He didn't mean the moves to this point. He just said the most likely reason, the best argument to not cut that additional 25 basis points is because if you do have to do an about face, that would be the stickier part. He's not talking about what they've done to this point.
I don't agree with him on that in the following sense. They shouldn't refuse to move now with anticipation of policies that have not yet been put in place. I think that would not be a good idea because then, the theory of the case is we're going to guess what the incoming administration is going to do, and we're going to move even before they put anything into place to try to, in some sense, deal with the inflationary pressures. I think, it is probably wiser for them, and Powell said this, the Fed is not in a position where they are speculating on policy. They're in a position where they respond to policy if it looks like it's going to adjust or weaken the inflation mandate. So I don't agree that they should wait now to see what happens so that they can avoid embarrassment. I don't think that's a good way to think about it.